Hi, I'm Peter Rose, founder of Longwood Currency Trading. Large lot size position management is an important topic that I cover in my Advanced Solutions course. I get a lot of questions from the more experienced traders out there that are trading or starting to trade with larger lot sizes, and they're running into some problems because there is a difference in how you trade in what I call an all-in, all-out process in the early stages of your trading journey, as opposed to when you get up into trading larger lot size positions. If you're trading a 3-lot, for example, at 30 bucks a pip, and you lose 10 pips, that's 300 bucks. Oh, okay, well you can make up for that. Maybe if you're trading 5 lots, it's 50 bucks a pip, you lose $500, and maybe you can manage that particular kind of loss. You're okay with that. But now you jump up to trading 10 lots, and that same 10 pip loss is going to cost you $1,000. And if you experience the stupid 6 statistically likely losses in a row that you may suffer, all of a sudden you're looking at $6,000 hit. That's a lot of money, even though from a percentage standpoint it might be the same. And so once you start working with the larger lot sizes, you have to change the way that you think about your position management. It's as simple as that. In the consulting work that I do, we talk about the 3 phases of the life cycle of a currency position: entry analysis, position management, and exit methodology. During the entry analysis stage, we're making a decision as to whether to trade all in, all out, or to build your position within the confines of when you transition from entry analysis into position management. When you are all in, all out, it means if you have 3 lots, you go all in with 3 lots and you close out with 3 lots. I never stage out of a position because I think that just ruins your win-to-loss ratio and your average win value. I don't think you're getting paid for your work. However, staging in is a whole other thing. Well, where do you stage in? Are you going to take 3-lot position and stage them in? Are you going to take a 5-lot position and stage it in? I mean, what are you going to do? You're going to open with 3 lots and stage the other 2 in? You're not getting paid for those extra 2 lots. You're in the big picture of things only dealing with 5 lots. And so you want to maximize that amount of money, because at the end of the day you're looking for your what I call a per trade expectation value, such that that's an amount of money that if you made that every time you traded, that would amount to, over the course of the year, a sufficient amount of money in order to justify the time and the risk that you're taking in trading currencies, right? That's just one of the 4 standard metrics that I work with on a consulting basis with people. So if you're trading a 5-lot, you better be trading the 5-lot right from the get-go, because if you make your 20 lots, you're gonna get $1,000 on that position, and that's pretty good. Are you going to reasonably make 20 lots as 20 pips as a day trader? I don't know. That's up to you. I'm just going by the theoretical probabilities, and those say that you're probably not going to get that. Now, you talk to some guys out there, or you listen to some guys out there, well, we made 200 pips today. Really? Maybe you made 10 pips with 20 lots or something. You have to watch out how folks are stating their win rates, their lots that they're winning, and all this other kind of stuff. Be realistic about it. And by the way, I just put a caveat forward in my videos when I'm talking about things like all in, all out. I'm going to trade with 20 lots, or I'm going to trade with 3 lots. I'm not talking about doing that on high leverage positions. If you're trading at 200 to 1 or even 100 to 1, you're doing yourself a disservice, because at some point you're going to get caught, and the losses are going to be so massive against your bank that you're not going to be able to recover from that. The only reason that you trade at 200 to 1 is because you don't have any money. If you don't have any money, you shouldn't be trading currencies, Because if you're trading 200 to 1, you're learning the wrong thing, and you're going to do that at the wrong time. In any event, when you're trading position sizes, and I put it characteristically about the 8 full lot position, not minis. We're not doing this stuff with minis. If you're trading mini lots aggressively, you're trading for the money, and you can't do that because at some point, in order to trade minis to make money, you have to increase your risk considerably. And because when you lose with a mini account, you lose 30 pips, you lose $30, let's say, on one mini. You go, wow, that's a pizza. Yeah, that's no problem. Try that 30 pip loss on a $200,000 account where you're trading 20 lots at 200 bucks a pip. Now your anal sphincter is going to swell up. And if you do that on 200 to 1 leverage, it's easy to get to 20 lots. You need about 10,000 bucks, right? Please. When you are looking at your positions, there are a lot of things in your entry analysis stage that you're balancing besides just whether you've got to take profit point and the distance to make it there. It has to do with your bank size. So when you're trading large lot sizes, do you want to go all in with 10 lots and take a 10 pip risk, $1,000 or is that too much? If it is, how do you limit that loss at entry to $500? Well, you enter with 5 lot position. And then if the position moves in your favor, before you get to position management, and there's a trigger for what signals the position management stage, but before you get to that, you can add in another 5 lots. You can build your position. So you're building the position before you get to the point where you're staging. So if you have 8 lot capability, you may be building that position with all 8 lots. You may go in with 5 and then add 3 in a building position. And then you go into position management and you're carrying an 8 lot load, and you feel that by profiting 8 pips on an aggregate average value of that position, you're going to make enough money to make that risk of the 8 lot bank worth the while of your trading. If you're making 0.1% on your money, you're probably not in the right field because you're not going to make enough money aggregate. Even if you made 0.1% 5 days a week, it's not going to add up at the end of the year, particularly when you take a huge hit and it knocks off 4 or 5% of your gain over the course of the year. You're just going to have a hard time. So this all deals with this large lot size. How do you mitigate the fact that you're dealing with large lots that add up to large dollar values? And so at a certain point, you use the large lot size, 8 lots, like I said, just to build your position before you move into position management. If you're trading 10 lots, then you might build your position with 8 of those lots, for example. So you'd go in with 5 and 3, okay, and then you'd have 2 lots to stage in after the fact. Well, that gives you that solid 8 lot build, so that if you go out before you start staging, you'll have enough money to make the amount of money that you have. What happens if you're trading a 20 lot position? Why would you build with 5 and 3 and then stage in all those other lots to 10 lots? You may never get to the point where you're going to stage them all in. So now instead of 5 and 3 on your build, you might go to 8 and 5 Or you might go to 5 and 5 and then start staging. Or you might go to 10 and 4. I mean, this is all covered in when I do coursework with somebody. But these are the mathematics that you have to go through so that you're getting paid for your effort, but you're not losing too much when you do lose. It's a balance. It's called risk management, but also correlated with risk management is position management. And if you don't understand how those two things fit together, then when you get to the point where you're trading large lot size positions, it's not going to go real well for you. So I just wanted to make you aware of certain things that you should be looking for in your trading journey. And though there are certain things that you will be doing when you're trading the larger lot size positions, you should not be doing them when you're trading mini lots or when you're trading low 5-figure account size trades, trading 3 full lots, 4 full lots, 5 full lots. You should be an all-in, all-out trader. But if you don't really understand what you're doing and learning the process of trading when you're doing all-in, all-out, then when you get to the larger lot size and you're trying to work through what the paradigm should be for managing those lot sizes as they come in at entry, or they come in at building, or they come in at staging, you're going to end up losing an enormous amount of money that you've made trading 3 lots. You make 10 pips on 3 lots, you're making $300 a day, 5 days a week, $72,000 a year. Now you're trading a 10 lot position and you're going to lose $1,000 if you get it wrong, $6,000 with the 6 losses in a row. You're screwed. You have to understand that. And if you don't know how to figure it out for yourself, you're not going to get it from a book. You're going to have to find somebody that's talking about this stuff on these videos, or talking about them, so that you get the transition right. Because the transitions that you go through, when I'm doing things, transitions might go 1, 3 lot positions, 5 lot positions, 8. I mean, that's how I did it. I started out in 2022 trading a 3 lot position. I had just started trading 3 full lots in 2021. I got the hang of that. I'm trading 3 full lots. Then I upped my game and I traded 3 to 6 lots. Then I went from trading 6 to 8 lots, 8 to 10, and I went up. So that within the course of about a 5-month period of time, I was building not only my skills at doing that, following the plan that I had, but I was also building myself a buffer of dollars so that when I'd lose at the higher lot size levels, I wasn't losing all the way back to my initial starting bank size. I mean, this stuff is just critical to know how to do. And I went for, you say, well, I've got a couple $100,000, or I want to trade 20 lots, and I just trade 3 lots, I want to get to it. And you're going to lose your money. There's a process of doing that. It doesn't take that long if you know what you're doing. I got my trading from 3 lots to the 3 to 6 in March, and I did that through until about by I think it was October. I was trading positions 15 and 20 lot sizes. Those are my regular positions that I was going in with, and trading some at 25 lots as well. I had money to trade more, but I wasn't ready to make that particular transition at that particular time. So there's a methodology to how you go about building your positions as you move through and more money is available to you to have a larger bank. Don't get to the point where you know what you're doing and you're trading really well, and they go, well, I really know what I'm doing, so I'm going to jump my game and I'm going to trade 20 to 1, and I'm going to up my or 200 to 1, and I'm going to up my lot size by that much, because you're just asking for trouble, serious trouble. Never would it be appropriate to trade at 200 to 1 or 100 to 1. Learn how to trade and you'll make a lot of money. Try to take these shortcuts and things, and yeah, you'll make a lot of money for a while, and then all of a sudden it'll be gone. How do I know that? Because of the folks that I talk with, and because of the information that I'm seeing that's still being propagated out there by 90% of these people that are hacking at you about how well they're doing and the millions of dollars they're... Life's good when you're lucky, but that doesn't mean that you have a good life. If you manage your risk and manage your positions well, you'll make a lot of money, because the amount of money is only limited by your desire to make that money. Peter Rose, Longwood Currency Trading. Have a great day and have a great trading day.